I just got off of the earnings call on NVDA, and yeah, I could talk about that and how what my biggest learning was that did the right thing last week of adding to my holdings in CoreWeave. But no, that's not what I want to talk about. What I want to talk about is the stock that's up 70% since this time last week. That's right, this time last week. That's AEHR, Air Test System. I've owned it for probably 2 years now, because I recognize that if you're making a GPU or a CPU that's the size of my fingernail and it has 1 million transistors on it, and each of those transistors functions as electricity goes through it, somebody's got to test them before they put them in an autonomous automobile. And somebody's got to make sure when you put the electricity through them that they work, because if they don't, it just might kill somebody. I mean, how about in a aircraft carrier or a submarine or a jet fighter? You got to know they work. And so I researched and I found that Air Test System has a unique system that it can test more wafers. I think it's 6 at a time, whereas their competition were only at about 1 at a time. So I said that's going to become an important stock as these data centers grow and the demand for accelerated compute grows. They're going to take off. Well, I mean, I was walking a dog for about 2 years, and then as the knowledge and the need became apparent, everybody realized what I have realized about 2 years ago. An air test system has taken off. I'm up about 92%, I think, today. It's up another 11% today. That gives it a total of 72% in a week. I've been telling my tribe about this, and I remember I got challenged on it about a month ago that said, Kerry, how long are you going to suggest we continue to hang on to this air test system? It's not going anywhere. And I said, it will, Bob. Trust me, it will, because Jensen is going to need it to make his GPUs work. If they don't test them, they can't put them in a Tesla. They can't. And so the world woke up to it. I told my tribe about it, and I think what I want to do is share with you the podcast that I put together on every stock that I analyze and put forward, and why my tribe members are seeing such tremendous returns, where we're outperforming the QQQs on a daily basis by between 3 and 10 times. And our portfolio is growing the last 3 months. I think we're up to 40%. You need to listen to this so you understand how you have access to the knowledge in the world in a format that you can understand so that you can make good investment decisions. This is Bart and Samantha talking about AEHR and giving you the cue that you need to do your due diligence and take a look at it. As I say, I've done this on about 80 stocks now. They're all on my tell sheet, and I want to make it available to you if you're one of the 1,000 that I will allow on the bus. That's right. We have this information available. It's what's driving our portfolio 40% in the last 3 months. And I believe we'll double our portfolio before this year is over. So listen to the AEHR podcast, and you make a decision. Do you want to be rich or don't you?
Kerry, for Best of Us Investors, you asked us for a deep dive on Air Test Systems. That's ticker AEHR. Specifically, can it deliver over 100% ROI in the next 3 years? Well, let's find out. Today, we're aiming to cut right through the noise, get you the critical insights, the maybe surprising facts, and a clear path forward on this company. It's right at the heart of the EV and AI revolutions. And joining me, we have Samantha and Bard Kerry. They're your AI agents ready to unpack the latest analysis report on AEHR. The mission is crystal clear. Does this high growth play, as the report calls it, have what it takes to double your investment?
That really is the core question, isn't it? AIR is, well, a critical enabler in semiconductor test equipment, and it's operating in markets seeing just explosive growth. We're here to scrutinize its position, its financials, and what the future might hold.
All right, let's start peeling back the layers then. Samantha, maybe you can start. What exactly does AIR Test Systems do, and why is it so, vital right now?
Okay, so at its core, AIR provides pretty advanced semiconductor test and burn-in equipment. You can think of it like a really meticulous individual stress test for every single chip before it goes out the door. They sell these high-end FOX systems. Those are the razors, right?
Mhm.
They can cost millions.
Millions, okay.
Yeah. But then, crucially, they also sell the blades. That's the wafer pack contactors and the die pack carriers. And this isn't just, a clever business model.
Right.
It's a financial engine. It generates predictable, high-margin recurring revenue long after that initial big sale. And that, for investors, is gold in this space.
So it's not just selling the big machine, it's the constant need for those specific parts. What's the ultimate goal of all this testing, though? Why so rigorous?
Well, its purpose is absolutely fundamental, ensuring chip reliability, rock-solid reliability. These systems stress test the devices under real-world conditions before they end up in critical things like EVs or, massive data centers.
Oh.
It prevents potentially catastrophic and certainly very costly failures down the line. It's like doing a final check on every single part of an airplane before its first flight. It's just crucial for automotive safety and AI performance.
That makes sense. And here's where it gets really pivotal for AIR, I think. This company isn't just like riding the wave of market growth.
No.
It seems like it's enabling it. Bard, what are these big market tailwinds pushing AIR forward?
Yeah, the first one, the really powerful initial tailwind, is silicon carbide. CC, that's pretty much the backbone of the EV revolution right now.
Right.
Projections show CC wafer production just scaling exponentially. We're talking from maybe 125,000 6-inch wafers back in 2021 to potentially over 4 million by 2030. And that's just for EV demand.
Wow, okay.
And AIR's systems. They're fast becoming the industry standard to get that automotive-grade reliability. That requires 100% wafer-level burn-in, no shortcuts.
That's a huge expansion, not
Yeah.
just, gradual growth. But it's not only CST, is it Samantha? There's more to the story.
Oh, far from it. Gallium nitride, again, now that's another high-growth area, standing at, over 40% CAGR, expected to hit maybe a $2 billion device market by 2029.
Another big opportunity.
Exactly. Another significant multi-year test equipment opportunity. And then, we have the latest one, the one grabbing all the headlines, AI processors.
AI, yeah, everyone's talking about it. So how big is that opportunity for AIR? How does it stack up against SIA?
Well, management estimates, and this is pretty eye-opening, that the AI chip burn-in market, the total addressable market, or TAM, could be 3 to 5 times larger than CO for AIR.
3 to 5 times, really?
Yes, because these AI accelerators, they're incredibly valuable, super complex, and they absolutely must be reliable for those big data centers.
Yep.
So, it represents a massive, still emerging opportunity that could really redefine AIR's whole trajectory.
Okay, so these markets are booming, but how does a smaller player like a Hair, what was it, around $59 million revenue in FY25, how do they compete with giants like Teradyne, Advantest? Those guys do billions. Is AIR just an underdog here?
It's actually a really interesting mix, Kerry. It's definitely small compared to those titans, who serve much broader, more mature market segments. However, AIR is clearly emerging as the category leader in its very specific, specialized niche.
Which is?
Wafer-level test and burn-in, specifically for these cutting-edge CV and AI chips. The report flat out says there's no U.S.-based peer with a comfortably focused product.
So it's not just a niche, it's like a critical, maybe uncontested niche. Does that give them a real competitive advantage, a moat?
Absolutely. That unique technology being the first mover,
Yeah.
it means very little direct competition right now in their specific, highly technical area. And this niche, it used to be relatively small, but it's rapidly becoming strategically critical for the whole semiconductor industry.
Okay.
Especially for anything mission critical where failure just isn't an option. That's a powerful moat.
Sounds like a great story, but there are always risks. Samantha, is customer concentration an issue? Does AIR rely too heavily on just one or two big names?
That's definitely a key point to watch, Kerry. Customer concentration is real here. Ayer's fortunes are quite tied to a few major players. Their lead semi-customer. It's widely understood to be Anand Semiconductor. Anand.
Okay, Anand Semi.
Right. So for you, keeping an eye on Semi's earnings calls, their expansion plans, that becomes a really crucial proxy for Ayer's semi business. You get insights there.
Makes sense. And for AI?
For AI, the first big customer is one of the cloud hyperscalers. Think Amazon, Google, Microsoft, one of those.
Okay.
Their plans for expanding AI projects directly influence Ayer's future in that space.
That's a really actionable insight for any investor then. Watching these other companies gives you an indirect pulse on Ayer. Okay, let's put Ayer to your test, Kerry, the rule of 40. Bard, how is the financial health? How does the balance sheet look?
Okay, Kerry, when we look at Ayer's balance sheet, it's frankly exceptionally strong. Liquidity gets an A. Their current ratio is around 5.7. That shows excellent short-term asset coverage. Plenty of cash on hand.
And solvency. Debt levels.
Also an A robust. The debt-to-equity ratio is near 0.1, essentially zero net debt. Ayer is, as the report says, cash-rich, debt-free.
Now, Bard, in this kind of volatile market for smaller tech firms, how important is being cash-rich and debt-free? Does that give them an edge, maybe in R&D or weathering downturns?
Oh, this is an immense flexibility, a huge edge. This kind of fortress balance sheet means they can self-fund aggressive R&D without taking on debt. They can make strategic acquisitions if they want. And yeah, they can weather market downturns much more comfortably than competitors who are loaded up with debt. It's a significant competitive advantage for investing long-term.
Good point. What about profitability and efficiency, Samantha? Where did they score there?
Profitability gets a B. It's above average. They had over 15% operating margin in FY 2024. And gross margins are typically pretty healthy, around 40–50%.
Okay.
Now, FY 2025 saw a modest GAAP loss. That was due to a dip in revenue and some heavy reinvestments they were making. But importantly, on an adjusted basis, they were still slightly profitable.
And efficiency.
Efficiency also gets a B. It's reasonable.
Right.
Profitability should improve as the company scales up. They're investing heavily right now, which, yeah, temporarily hits the numbers, but it's building future capacity for that potential exponential growth.
These fundamentals sound pretty solid, but how does that translate into the valuation metrics investors look at for a growth stock like AEHR? Is it expensive?
Well, the valuation definitely screams growth stock. The trailing PE is in the high double digits. The forward PE is well over 100 based on the near-term forecasts.
Wow, okay. High expectations there.
Exactly. And the price-to-sales ratio, near 12 times. That's much higher than the typical industry average of maybe 4 to 6 times. So yes, investors are clearly pricing in substantial future growth.
What about return on equity, ROE?
ROE was actually over 40% in FY 2024, but that was boosted by a one-off tax benefit. Underlying, it was probably closer to 15%. It dipped a bit in FY 2025, but it's expected to rebound strongly as their net income improves with scale.
Okay, now for the big one, Bard. Kerry's rule of 40. Revenue growth plus earnings growth should exceed 40%. How does Ayer measure up?
Kerry, Ayer easily exceeds your rule of 40, no question. Analysts are projecting revenue growth averaging around 20% annually for the next 3 years, and EPS growth over 50% annually, although that's off currently low base.
So the combo is well over 40.
Way over. And this isn't just theory, right? Look at their history. Revenue jumped from $16 million in FY 21 to $66 million in FY 24. That's proven growth. So yeah, it comfortably surpasses that 40% combined target.
That's a really compelling signal for their growth path. And speaking of scores, Samantha, what did our internal Best of Us Investors system assign AEHR for its ROI-based growth potential?
We gave Ayer an 85 out of 100. That's a strong endorsement. It signals what we see as an above-average opportunity and, importantly, a credible chance to meet or even beat that 100% return target by 2028.
All right, 85 out of 100. Financials look solid. Growth metrics are impressive, meets the internal criteria. Let's shift gears a bit. Innovation, management, external factors. Samantha, Ayer's edge seems built on innovation. What's their moat there, product-wise?
Yeah, their competitive edge is really rooted in continuous innovation. They've got over 50 issued patents backing that up.
50? Okay.
Yeah, protecting core tech like their FOXXP multi-wafer system, those proprietary wafer pack contactors we talked about.
Yeah.
And they consistently reinvest a good chunk of revenue, like 10–15% of sales back into R&D. That's high for this industry, and it's clearly paying off.
How is it paying off right now? Any recent breakthroughs that stand out?
Well, the big one recently is their high-power FOXXP system. It was specifically designed for testing those demanding AI processors. And that innovation directly led to their first big order, over $10 million, from a hyperscaler.
Ah, connecting the dots there.
Exactly. Plus, they strategically acquired Incal Technology in 2025. That broadened their product suite into packaged part burn in the Sonoma line. It shows they're adaptable, expanding their strategy, and their future pipeline. It includes high bandwidth memory, more GAN applications, and landing more AI customers. That's why this growth story really feels like it has legs.
Innovation looks strong, but a company needs good leadership. Bard, tell us about AIR's management. Who's steering the ship? What's their track record like?
The CEO is Gan Erickson. He's been leading AIR since 2012, so quite a while. He brings decades of semiconductor industry experience, and importantly, he's the one who successfully pivoted the company towards CC and now AI. That shows strategic vision and agility.
And how do they operate? Communication, skin in the game.
He's known for being pretty transparent in communications, generally has a good track record of meeting targets, and crucially, yes, he and other insiders hold meaningful amounts of stock, so they definitely have skin in the game alongside shareholders.
How did they handle bumps in the road? There was some guidance reductions mentioned earlier, back in early 2024.
Yeah, and they faced that head on.
Yeah.
When they had to reduce guidance, they were transparent about it, explained the temporary delays, and really emphasized their focus on diversifying their customer base. That builds a lot of credibility, shows they can manage through challenges, not just ride the good times.
Good leadership is key. Let's look outside the company now. Samantha, any big regulatory or geopolitical risks we need to consider for AIR?
Well, AIR isn't super heavily regulated directly, but it is definitely influenced by external factors. Trade policy is one, especially U.S. export controls towards China.
Right.
Now, currently, the risk seems moderate because AIR's focus isn't really on the most scrutinized types of logic chips. Tariffs could potentially cause some order delays, but on the flip side, things like the GHPS Act, which incentivizes domestic manufacturing here in the U.S., that indirectly benefits them by boosting the whole ecosystem.
What about potential political shifts? Say a change in administration in 2025, like a Trump administration.
Yeah, there could be some shifts, maybe changes to EV incentives, which could be a slight headwind for the CC side. But you might also see broader pro-business measures. And, if there were something like a Russia ceasefire that could ease global tensions, maybe stabilize energy prices, help supply chains, generally de-escalation tends to boost economic stability.
So overall,
the landscape looks kind of neutral to slightly positive for AIR specifically. No major roadblocks are apparent right now.
okay, good to hear. No major red flags on that front. What about legal stuff, IP risks, Bard?
Those seem relatively low, actually. I mean, you sometimes see shareholder lawsuits with volatile growth stocks. That's fairly common. But there are no known significant judgments against AIR. And their patent portfolio, over 50 patents, now acts as a really strong defensive moat. It deters competitors. Plus, there's no known active IP litigation going on. Their continuous innovation helps insulate them further.
Okay, Kerry, we've looked at the business, the markets, the management, the risks. Now, the moment you've been waiting for. Can AEHR really deliver on that ambitious 100% ROI target? Bard, let's start with the technical picture. That stock chart has been wild.
It really, really has. A dramatic journey. Under $3 back in 2021, zoomed up to around $53 in August 2023, then a pretty deep correction, down to around $6 in late 2024.
Ouch.
Yeah. But now, it's rebounded strongly, back into the mid-$20. And importantly, Kerry, it recently broke through its previous 52-week high, around $21.44. That's generally seen as a significant bullish technical signal, suggests more upside could be coming.
So momentum looks good, but is it maybe getting ahead of itself short term? Is it overbought?
Momentum is strong, definitely. But yeah, the RSI, the Relative Strength Index, is near 68. That's getting close to what traders call overextended territory. It might suggest the stock needs to pause or pull back a bit soon. It's also trading, about 47% above its 50-day moving average and an incredible 97% above its 200-day moving average. That confirms a powerful uptrend, no doubt, but it also signals it's pretty stretched short term. Some consolidation wouldn't be a surprise at all.
So for investors watching the charts closely, what are the key levels, support and resistance?
Okay, immediate support looks to be around $21, $22. That was the previous breakout point, so it should act as a floor now. Stronger support's lower, down to $14, $30, $15 where it consolidated before.
And looking up, resistance.
Resistance starts coming in around the 30 yards. Then the major long-term resistance is back at that all-time high, near $53, $54. And remember, Kerry, this stock has a high beta, around 2.5.
Meaning it moves more than the market.
Exactly. If the market moves 1%, expect AIR to swing roughly 2.5% up or down. So you have to be prepared for those larger swings. It's not for the faint of heart.
Okay, time for the big reveal. Samantha, let's get into those scenario-based stock price forecasts. January 2026, 2027, and 2028. Crucially, how do they stack up against our 100% ROI goal?
All right, we've modeled these out using a 12% WACC, the weighted average cost of capital, which seems reasonable for a small cap tech stock like this. Let's start with the conservative scenario. This assumes growth is a bit slower than forecasts. Here, we'd see the stock maybe in the mid-$20 by Jan 2026, low $30 by Jan 2027, and landing somewhere around $35-$40 by Jan 2028.
So, under that scenario.
That implies only about a 50% to 65% gain over 3 years from current levels. That would be, well, underwhelming compared to the 100% ROI goal. It wouldn't quite get there.
Okay, that's the cautious view. Important to know. Now, what about the moderate or base scenario? This one assumes AIR executes pretty much in line with current analyst forecasts.
Right, the moderate scenario. Here, we project the stock moving into the mid-$30 by Jan 2026, then the mid-$40 by Jan 2027, and reaching $50-$55 by January 2028.
And that means?
That implies roughly a double from today's levels. So yes, under the moderate scenario, AIR meets the best of us investors' 100% plus ROI target.
Okay, that's the target hit in the base case. Now, what if things go really well? Flawless execution, market tailwinds stay strong. What does the aggressive scenario look like, Bard?
Right, the aggressive scenario. If everything aligns perfectly, maybe they land multiple big customers faster than expected. We could see the stock hitting around $50 by Jan 2026. That's already challenging those previous all-time highs.
And beyond that?
By Jan 2027, maybe $70, $80 becomes conceivable. And by Jan 2028, potentially north of $100 per share.
Wow.
Yeah, that would be a phenomenal return. We're talking 300% or more from where it is now. So obviously far exceeding the 100% plus ROI target.
So let's answer the big question directly then. Does AEHR meet Kerry's 100% ROI in 3 years criteria?
Yes. Based on our analysis, under both the moderate and aggressive cases, it absolutely does. And with that 85 out of 100 investment score, there's what we call moderate to high conviction, that it will at least come close to doubling, if not doing significantly better.
Fantastic. Okay, so based on all of this, what are the key actionable insights for you, Kerry, and for Best of Us investors? Samantha, first up, positioning. How should we think about AEHR in a portfolio?
Given its profile, AEHR is best viewed as a high-growth, high-volatility satellite holding. It's not likely a core position for most. Your portfolio, Kerry, currently holds 2,640 shares at a $13.92 cost basis. That's a significant unrealized gain already. The key question for you, as always, is, does adding more or even holding this position size align with your personal risk tolerance and overall portfolio construction? If it does, you might consider adding.
Okay, and if you did want to add, what are the potential buy triggers to look for? When might be a good time?
There are a few ways to think about it. You could look for strategic weakness, maybe a pullback towards that low $20 breakout support area around $22, or wait for a high confidence catalyst.
Like a big announcement.
Exactly, like signing a second major C2C supplier or landing another hyperscaler for their AI systems. That would be a strong signal. Alternatively, for more of a momentum play, you could look for a confirmed breakout above, say, $30 on strong volume. That might indicate the next leg up is starting.
Makes sense. Now, crucially, Bard, protecting the downside. This stock is volatile.
Yeah.
What are the sell triggers or stop loss strategies you'd recommend?
Discipline here is absolutely key, Kerry. We'd suggest a stop-loss region somewhere around $19, $20. A close below $20 would likely signal that the recent breakout momentum has failed and the short-term trend might be shifting down.
Okay, $19, $20 as a key level. Any other ideas?
You could also use a trailing stop-loss, maybe set at 25% below the most recent peak, letting profits run but protecting gains. Or consider taking some profits off the table if the stock just, vaults higher very quickly, say into the high 40s or $50 in a short time frame. Remember the old saying, no one ever went broke taking a double off the table.
Wise words. What's the overall risk management plan then, moving forward, Samantha?
You need to continuously monitor that customer concentration risk. Keep a close eye on news out of on-end semi and those hyperscalers. And watch execution risk closely during their quarterly earnings reports. Are they hitting their targets? Are margins holding up? And be ready to adjust your position if the fundamental investment thesis changes, maybe competition emerges faster than expected, or if those broader macro risks start to really bite, like interest rates spiking significantly higher.
Speaking of macro, what are the key things investors should keep an eye on in the broader economy over the next few months?
Definitely watch interest rates. If the 10-year Treasury yield climbs back above, say, 4.5%, and the Fed signals more tightening, that could really compress valuations for gray stocks like AEHR. Also, keep tracking global EV sales growth and any shifts in government policy there, and monitor the spending plans of big tech on AI infrastructure. All these are major inputs into AIR's potential growth, headwinds or tailwinds.
Got it. Are there any specific company catalysts we should be watching for in the next, say, 6 to 12 months?
Yes, definitely. Signing that second large Sika customer would be huge. Securing additional AI orders from new clients beyond the first hyperscaler, maybe even news of a strategic partnership. Any of those could be significant positive catalysts. And just be prepared for volatility around earnings reports. The market hangs on every word regarding guidance for these high-growth names. Oh, and Kerry is the analyst who worked on this, full disclosure. I currently hold a long position myself, 2,640 shares of AEHR, purchased at $13.92. My plan is to hold for that multi-year upside potential we discussed, possibly add more on significant dips, and definitely use active risk management like stop losses.
Thanks for that transparency. Okay, so let's wrap this deep dive up for you, Kerry. The bottom line seems clear. Air Test Systems really stands out as a high potential growth stock. Under our moderate and aggressive scenarios, it absolutely aligns with the Best of Us investors' ambitious goal of 100% ROI over the next 3 years. And here's maybe a final thought to leave you with as you consider this investment. In a world that increasingly demands reliability and efficiency, especially in these super fast-paced areas of EVs and AI, companies like AEHR become more than just equipment suppliers, don't they? They start to look like indispensable partners. What if AEHR isn't just riding these megatrends, but is actually enabling them? What if its niche, which seems small, is actually becoming the critical choke point for future innovation? That's maybe the real deep dive to ponder. How essential can a company truly become when it solves a crucial problem no one else is, at a scale no one else currently can?